Welcome to the Savvy Dentist podcast with Dr. Jesse Green, the show where great dentistry meets great business. Listen in each week as we bring you an inspiring person who will share their story, ideas and business techniques to help you create a practice and a life you love. And now introducing your host, Dr. Jesse Green.
Hello everyone, it's Jesse Green here. Welcome back to the Savvy Dentist podcast and to savvydentist.com. It's great to have you here as always. And our conversation today is about a topic that's near and dear to many people's hearts. And that topic is the subject of wealth creation. Specifically, we're going to be talking about property as a vehicle to create wealth. And my guest today is Sally Roche. And Sally runs a website called Mindset Moneybox. Our conversation is far-reaching and wide-ranging, and what was really fascinating about the conversation with Sally was that we discussed a lot about the mindset in investing and understanding why one strategy might be perfect for one person but could be completely inappropriate for another. And that's because different people have different mindsets around risk, different stages of life, different objectives, different things that are important to them. And it's then about matching the right investment strategy to that particular mindset. And that's where Sally really excels. It's about creating a strategy that's right for that individual rather than just saying do this or do that. So we do cover a lot about different investment strategies. We talk about short-term versus long-term. We talk about cash flow strategies versus strategies that produce capital growth. Now, I do need to say as a form of disclaimer that this does not constitute financial advice. I know we're getting the legalese stuff in here for this intro, but I need to let you know that if you're going to go embark on some investment strategies, to make sure you do seek some professional advice and counsel around that. But with this particular podcast, there's lots of education, lots of thought-provoking ideas that are going to help you ask better questions of your advisors, start you thinking about creating wealth, creating things outside the business. We know your practice is the engine that drives your wealth, so it's about making sure that your practice is set up so that it can drive your wealth. And there's a lot to think about in that process. So a ton of stuff in this podcast that I know that you're going to love and be able to apply for practical use. Now, if you happen to be new to our podcast, welcome. It's great to have you. And if you'd like to learn more about, how we do things and what we do, then I'd love you to come across to our free Facebook group. It's called the Savvy Dentist Facebook group. You can find it by searching in Facebook. Just type Savvy Dentist into the search bar there, or go to savvydentist.com/Facebook and you'll find us there. And when you join that group as a practice owner, you're going to find there's training, tips and tools that are going to help you create practice success. Now, whatever success means for you, whether it's earning more money, having more time, doing more of what you love, all of those sorts of things that create a successful and meaningful life, we have some training and tips and things there for you. So we'd love to see you in that group. But for now, we're going to be talking to Sally. And as I said earlier, I hope you have a pen and paper handy because there's lots of great thoughts, lots of great ideas, lots of wonderful insights that she shares that I know are going to be really helpful for you. So here's Sally. Sally Roche, thank you so much for taking the time to come and hang with us here at the Savvy Dentist podcast. How are you today, my friend?
I'm going fantastic, and I'm so excited to be here talking to you, Jesse, and to all your lovely audience.
Oh, well, thank you. I'm looking forward to talking to you as well. We're talking about a topic today which is really, really important, and equally, many of our listeners find it very interesting, so I think we're in for a bit of a treat. Now, Sally, your work is these days around helping people grow their wealth. You mentor them, you coach them, you train them, and so on. I'm pretty sure that's not what people put on their career form when they finish high school. I want to be a wealth mentor. Typically that involves some sort of life experience, maybe some sort of event that's triggered that. I'm curious to understand what the stimulus was for you to A, get it and create that wealth, and then B, start teaching about it.
Yeah, so I started investing in property probably over 20 years ago. And I started renovating because I bought my first property and everyone was renovating at that stage. And let's face it, they still are. And I learned very quickly renovation wasn't for me. And I've gone through a few different property strategies over the year to try and build my wealth. And some actually worked really well for me and made me millions. And then other ones weren't so profitable. But I became really curious because the ones that worked well for me, other people may not have done so well at. And ones that worked really well for other people were not right for me. So I sort of delved into that and had a look at it and learned a lot about mindset and right strategies. And now I want to share that with everyone else because I don't want everyone else to make the same mistakes that I did.
Yeah, those mistakes can be very costly. Obviously, mistakes come in the form of money. They come in the form of time, lost opportunity, all of the above. So I'm sure that you, like me, have lost your share of skin in the game over the years, a few bumps and scratches and grazes along the way. And I've certainly got a few scars around that as well. So I'm interested to ask a little bit about the mindset piece because obviously different people have different views around money. They have different aspirations around money, different family upbringing and all of that stuff that goes into people getting, either really healthy beliefs around money or some having unhealthy beliefs. Can we just talk as a bit of a foundational piece about what constitutes a healthy relationship with money?
Yeah, that's actually a fantastic question. I suppose the interesting thing is we're all different when it comes to money. And a lot of it we got when we were children. So if our parents said things like money doesn't grow on trees, we might actually start to get a bit of a scarcity mindset around money. But if your parents were maybe macadamia nut growers, you'll be going, yeah, money grows on trees every day, man.
Yeah, exactly.
So there's all these little things that happen throughout our lives that impact our relationship with money. And sometimes we know about them and sometimes we don't, but they kind of get embedded into our mindset. And it's not until something happens that we sort of go, no, I can't deal with that, or, yep, I want more. And sometimes it gets shown up as greed, where people want more and more and more, and it doesn't matter how much they get, they're not satisfied. And for some people, it comes up in what's called a scarcity mindset, where they kind of self-sabotage themselves and may not be getting the outcomes they want because subconsciously they're a little bit scared or don't believe that they are worthy of having money or wealth.
That's really interesting. So there'll be obviously a spectrum around beliefs and values and upbringing. And people listening to this might be able to identify with that. Maybe they're reflecting on the kitchen table conversations that their parents had around, whether there was, an ample amount of money or an insufficient amount of money. And so if you're listening to this podcast, you can obviously reflect back on your own childhood and try and analyze your own relationship with money. But before we get into the nuts and bolts of, what investing looks like and what the steps and pros and cons and different, options are, I wanted to ask you, Sally, if there is someone listening to this podcast who is thinking, my upbringing around money left me with some values and some beliefs that perhaps are no longer serving me. Is it possible to change those values and beliefs? And then secondly, if it is possible, what would be a couple of things that people might need to consider as they go about that process?
Yeah, so you definitely can change them. So if you think about something you believed when you were younger, as an example, if you look at little kids now, we grew up believing in Santa and the Easter Bunny and the Tooth Fairy, and maybe they exist and maybe not. So some of these things we grow a little bit older and change our mind on, and some of them we don't even know they're there and might need some help.
Got it.
And sometimes they might change by your experiences. Like if you believe, you can't make money on property, but then you actually see everyone else doing it, that can subtly change your views on it. But you can also change these things through coaching and mentoring as well, by being challenged, trying out new things, seeing a different viewpoint.
I love that. And I guess the thing around that is if someone has had that mindset or that upbringing and we're asking them to think about things in a new and different way, and then they want to take action on that, I guess to ask them to take a massive step and say, we're going to go and buy a $5 million property, that's probably a bridge too far up front. That's going to potentially be too much for them to manage. So we'll need to look at that first or second step, that they need to take and do it in a process. So you mentioned to me up front, Sally, I'm really curious to understand this. You said some of the investing strategies that work brilliantly for you, and you've obviously done very well with them, are not the right strategy for someone else because they've got a different mindset, they've got perhaps different values, whatever that may be. So I wanted to ask you, is there, I guess, again, there's a spectrum and an infinite number, but are there broad categories of mindset or personalities when it comes to investing, or is it just such that everyone's so different?
I suppose there's groups of strategies and mindsets. And for example, if your goal is for cash flow, there would be a certain group of strategies you go to compared to if your goal is capital growth. And then obviously if you want to be very hands-on, involved, doing a lot yourself, there's going to be a group of strategies versus if you, want to just put the money in and walk away and not have to deal with it all the day, every day, then there's going to be different groups of strategies. And there's all these different combinations in between. So for example, you want to be hands-on. So you look at the renovation strategy, but you may not have a lot of time on your hands. So you might sort of pay someone else to do it for you. Or you might only have a small amount of money to invest. So doing something like a real estate investment trust might be a better option than if you've got a heap of cash flow, maybe land banking might be a better option. So there is a series of different strategies you can do, and they're all got different combinations between how much time you got available, if you want to be hands-on, hands-off, what your outcome is, how much knowledge you've got, that kind of information.
Okay. So obviously we'll get into some of those in a second because that's really where I know the meat of our conversation is going to be. But I read somewhere that the Australian pension is somewhere around about $25,000 a year. I think, that's a fairly well-published number. Now, I know people listening to this podcast can say, that's not going to be me. I'm going to be fine. I get it. But the fact of the matter is that that number is there because a lot of people rely on it. And, the average person probably has some, reliance on the pension. And to speak very plainly, it's like we all think we're above average drivers, but that doesn't make sense from a statistical point of view. So somewhere, somehow, some of the dentists in the world are going to potentially end up in a situation where they're reliant on some form of retirement support. And so I guess what I wanted to do is to start thinking about why we need to build wealth. What are the things we need to be thinking about? Because the work that I do, what we find is we can help the practice produce a lot of money, and that's great. That's surplus cash flow. But then it's about doing something sensible with that at the other end of that. And what I've observed is that a lot of people's lifestyle expands to what their income is. Is that something you've seen as well? Is that a common thing, or is that just a by the by?
No, it's very common that every time someone, say, gets a pay rise or something like that, all of a sudden their lifestyle increases. And what they were saying back on before on the lower wage of, I don't have enough money, I don't want to can't get those things that I wanted, even though they get a pay rise or make more money through their business, are saying exactly the same things because their lifestyle just expands to meet the amount that they're earning.
Yeah. So I guess by extension of that, we need to be quarantining some of the business money and putting that aside for investment or wealth growing purposes. And, obviously, there's going to be different formulas or percentages or thoughts around that. But do you have any particular thoughts about, is there a certain amount of percentage that we need to put aside for that? Or is that just like an individual preference?
It's going to change based on who you are, how much you've got available. But what we sort of suggest is you start with something small, because some people go for huge amounts and go, I'm going to put 10% aside. But it's not realistic for them of where they are because it's too much of a lifestyle difference. So what we suggest is start off with something small, whatever you can do. Maybe it's 1%, maybe it's a couple of $100 a month, and then sort of keep growing that, because the biggest help with wealth is compounding interest, that basically your money will continue to grow over time. So if you can sort of start off small and just keep building on that, what you get in at the start is going to have the biggest impact longer term.
Yeah. I think it might have been Einstein that said compound interest was the eighth wonder of the world or something. Someone famous said anyway. It was either Einstein or Bruce Lee. I can't decide which one. One of them, right? Someone wise said it. So whoever it is.
Yeah.
Okay, so let's come back to your work specifically, because I think this is where the juice of our conversation is going to be. You mentioned to me the different categories, whether you're interested in, income, whether you're interested in capital growth, whether you've got lots of time to spare or no time to spare. So let's break this down into some of the strategies. Let's just say, you're an older person, and I'm using this very cautiously because I'm going to say somewhere in the 40s or 50s range. And I know that those people younger than me will be saying, yeah, damn right, that's old. And then the people older will saying, hey, buddy, take it easy. So let's just say mid-career. And let's just say we're keeping one eye on, what happens after our dental career. What sort of things would someone in that stage of life typically be looking at? I'm assuming they're thinking about income strategies, or are they looking at typically trying to grow the nest egg with capital growth? Is there a preference in that time frame?
Yeah, so I suppose it depends on how far they are away from retirement.
Yeah.
If they're sort of thinking the normal retirement age of, mid-60s, in their 40s, they might want to grow that capital growth with the aim of potentially selling part of it when they go to retire to give them that cash flow.
Mm-hmm.
Or if they buy them now and start, say, renting the properties, then they're going to be even more profitable by the time they hit that point. But if you're looking to retire potentially in the next few years, you might want to focus on something that is going to build your cash flow right now to replace the income you're getting from your dental practice for when you do retire.
Okay. So let's talk about those income strategies for a moment. We'll come back to the capital growth strategies. So broadly, what sort of income strategies, I know there's probably endless ones, only limited by imagination, but could you just give me a bit of an overview of the categories of those?
Yeah, so the kind of strategies that build cash flow are the ones that rent out. So you might just straight buy and rent it out. Mm-hmm. If you don't have a lot of time, you might build to rent out. You might buy something older and renovate it. You could be doing things if you had a lot of time, which I imagine isn't the case for people running a dental practice, of like renting a room. If you've got a big house, you could rent a room on Airbnb and get cash that way. They're sort of the main ones. A lot of the property ones are around capital growth.
Mm-hmm. Okay. So again, just before we go to the capital growth strategies for a moment. So if we look at that, we've got, buy a property, rent it out, build a property, rent it out, rent out a room, etc. What about things like wraps? Are they still available, or are they still part of the issue, like the rent to buy, or kind of routine where you've got a second wraparound mortgage on those things? Are they still popular, or are they not such a thing anymore?
Yeah, there is sort of owner finance where you have a property and you sell it with the aim of the person renting it to sell it, and that can give you cash flow. They're generally not as popular because people that want to rent the property to buy it from you, generally they do that because they can't get a home loan themselves. So the risk associated with that is a little bit high.
Mm-hmm.
But if you potentially like those risky kind of scenarios, then you could potentially make more money through that strategy than if you just rented the property straight.
Okay.
So part of this comes into your risk profile. There are sort of that one and sort of that sell before settlement, where you buy a property and before you hit settlement, you resell it on for a profit. Those ones can be really good at making money in the right environment, but they do have a higher risk, and you have to make sure you've got all the legals in place. Because if something doesn't quite go to plan and say the person stops paying the rent, then you've got to have the right things in place to make sure that you can still come out of the deal in a good environment.
Yeah, got it. So let's just talk about the buy and hold rent kind of strategy. And again, property in Australia, we're recording this not long before Christmas in 2020. We've come, I don't want to say out of the pandemic, but we're kind of getting hopefully close to vaccines and all that sort of stuff as we're recording this. There was all sorts of Armageddon predicted around the property market a few months ago. My only advice when it comes to TV finance reports is ignore most of it.
Love that.
They're selling headlines, right? I don't know how many times the market's either been on the boil or crashing or whatever, some sort of, so one way or the other. But nonetheless, we're seeing some property prices increase in various markets at the moment. So what's the likelihood in today's world of being able to buy a property in a particular area and have that positive cash flow from the get-go? Is it a case where we're going to have to be negative cash flow for a while and to see that rent increase over time? Or is it a case that we need to buy more regional to find the positive cash flow properties? Can you just give me an idea of what's happening in the marketplace around that? And I know that this is at a particular moment in time, but just generally speaking.
Yeah, so if you want to have a positive geared property straight away and buy a property as it is and rent it out, they can be a little bit of a challenge to find, whether it's this market or a lot of other markets, primarily because if it's in that case, there's going to be high demand for it, in which case the price of the property goes up. But one of the strategies that I use is build to rent, in which case I buy a block of land, just go to a generic sort of commercial builder like, your Metricons, your Dennis Family Homes, and build on it. And they're more likely to be positive cash flow. So technically still negative geared, but because of the tax write-offs that you get from it being a new property, that gives you enough money back to make it positive over the year.
Okay.
So those ones in large regional areas are still very much available.
Okay. All right. Cool. And of course, when we're looking at those regional areas, I guess one of the things when you're choosing an area, we're going to need to look at things like population growth and the movement of people. Are there any other factors for someone listening to this podcast who might go, oh, that sounds like a good idea? What sort of area should I be looking for? What sort of factors go into looking into that area? Is it simply population growth? Is it median income? What else would we be looking at?
I suppose I look for a variety of different areas because I'm one that invests in those large regional areas.
Mm-hmm.
So I look for something that has large businesses as well, but isn't based on one industry.
Mm-hmm.
So I look for ones that say have universities, have hospitals, have businesses and industry, as I said, and then sort of look at the price versus the rents available. And the ABS actually has a lot of great information here. So the Australian Bureau of Statistics, where you can sort of see rents, how many people rent, what the average purchase price is. So that way you can sort of do some average calculations to sort of see, am I going to get a good return here or not?
Mm.
And then you can sort of narrow down the areas and then start digging a little bit deeper into the actual sales, what's going well, talk to real estate agents to see if that's going to be a good area.
Okay, excellent. So that's one of the cash flow strategies we spoke about was, build to rent. And as you mentioned, buying an existing property, an older property, and trying to have it cash flow positive is going to be tough. But your strategy there is great. What other cash flow strategies could we be looking at there? Again, we'll get to the capital growth ones in a moment.
Yeah, so if you're very hands-on, you love designing things or fixing things around the house, then a renovation one could be really good as well. It's sort of similar to building, but instead of doing something from scratch, you're sort of buying maybe an older property and it's a little bit cheaper because maybe it's a little bit run down and you can get in and fix that up and rent it. And it can sort of have very similar kind of returns. And again, you can claim a lot of that against your tax as well.
Got it. Okay, cool. So then I guess the question then is we go, okay, well, if we've looked at the rent situations and the income-based strategies, we think, okay, well, I want to grow my net worth. I want to, really make sure I've got some capital growth here. And maybe, as you said earlier, we're going to, grow that capital growth with a view to selling off some of those things and investing them in other things later that are more cash flow oriented. What sort of strategies really, from your perspective, are the best for growing capital?
So there's a few different strategies here, and it's going to kind of depend on the time you've got available and how much cash you've got available.
Mm-hmm.
So you could go for something like a real estate investment trust, exchange traded fund, an index, a fractional investment platform. Now, they're really good if you don't have a lot of cash up front
mm-hmm.
and you want other people to invest for you.
Mm-hmm.
So most of those are available on, say, the Australian Stock Exchange.
Mm-hmm.
So you can just go on the Australian Stock Exchange. You could buy, $1,000 worth of them. So if you don't have a lot of cash to spare, don't want to go to the bank for a mortgage, all that sort of stuff, you could just be buying a few of those each month or each couple of months when you've got money available.
Yep. And you can get into some good groups, right? Like Westfield and all those ones. You can buy REITs for those, right?
Yep. And you can even buy them for land estates. There's lots of different things. Wind farms, if you sort of want to have that environmental impact.
Oh, nice.
You could go into a fractional investment platform to invest into a wind farm or a solar farm.
Great. Okay.
Now, they're really good if you don't have a lot of knowledge, don't have a lot of time, you don't have a lot of cash. You could just invest in them, hold for the long term. They'll go up over time, and then you can sell them off when you're ready. Conversely, if you've got a lot of cash and a lot of time, you might do something like land banking. So if you think where you live, there might be a little block of land that no one's ever built on, and you just know the price of that is getting better and better each year because there's no other vacant blocks in that area. Someone's land banking there where they've brought it, they're just sitting on it. One day they might sell or one day they might build their dream home on it. So land banking could be as small as a little house block or as big as 50 or 100 acres just on the outside of a regional town or one of the major capital cities where people just buy it, hold on to it for 10, 20, 30 years. And then when they're ready, they sell it because they've got all that growth in the meantime and everything else has started building up around it, which makes it more desirable.
Okay. And I guess the question then, Sally, just on the land banking, because I know that there'll be lots of ears pricking up. People are probably driving on the way to work as they're listening to this. So there'll be people kind of going, oh, I want to take some notes here. But if you're driving, keep your hands on the wheel. And if you're not driving, then get your notepad out, because I'm about to ask a very pertinent question. When it comes to land banking, oftentimes there might be a large parcel of land, but how do you then go and find those parcels of land? Is it usually one parcel of land that you're buying, or is it stitching together different parcels of land to form one parcel? And then my follow-up question to that is, oftentimes these transactions are not listed on realestate.com.au. So then how do you kind of get into that process of uncovering where those deals might be?
Yeah, so it's generally sort of a bigger parcel of land.
Yep.
But obviously it's going to depend on your situation. If you've got your eye on something and maybe there's a couple of farms in that area, you might buy the first one and then approach someone else that owns the land nearby or something along those lines and sort of build it up to get a better parcel of land. Now, I suppose these are ones you sort of need to keep your eye open for. There's sort of a little bit of risk in terms of you're sort of buying it. Generally, it's marked rural when you buy it, and then you're holding on for a long time for that land to become in demand because everything else is being built out, in which case it kind of gets converted over to maybe residential land, and then you can sell it for a small fortune.
Right. Okay. And where might one find those deals? Is it a case of door knocking? Is it a case of, just being in touch with the agents? What's the market? Now, I know, ladies and gents, I'm asking Sally here to give up some of her secret sauce. So we're just going to respect that she probably can't divulge everything because that's her business. But nonetheless, we're going to try and pry as much out of her as we can. So what would be a starting point, please, Sally?
I suppose with everything in real estate, and it's probably the same in your businesses as well, it's really about building relationships. So if you build relationships with agents in areas that you're looking at, and then over time as something comes up, if they really know what you're looking for and you've built that right relationship, when they hear about it, they're going to, hey, Jessie, this has just come along. I think this is going to be really good for you to do this longer term. Is that something you'd be interested in?
Great.
So similar to your businesses, build relationships with agents. They're normally the ones that get that first sort of information and they can help you out.
Right. So the old network equals your net worth kind of routine.
Yep, definitely.
Yeah. All right. So let's just say, if we're going to land bank for 20, 30 years, Sally, obviously that's quite a long time frame. And obviously the risk in there is that the area doesn't take off and you're holding farming property or some sort of rural, semi-rural property for a long time with no income. So I'm assuming that you're looking at a variety of different strategies that offset one another. You're not going to do all land banking or all build and rent or whatever. So how do you craft a portfolio of deals that's going to kind of allow a bit of capital growth as well as, covering the rent or the cost, so you can have your portfolio at least covering its costs and hopefully providing an income for you? What's the art and science of building a portfolio?
That is a fantastic question that not many people ask. So that's really good, Jessie.
Thank you.
I think it's about looking at your goals and trying to work out how you get to that end point. And sort of thinking about who you are, where your strengths are, and really what your risk factors are going to be. So if you're going to go for something that, like land banking, that takes 20 or 30 years, you might go, okay, well, we'll do one of those, but to offset that, let's buy some houses and rent them out to, one, pay for that, but two, to give us an alternate. So I suppose it's about spreading them out into different areas based on what you're really interested in and what you connect with, and then working through it that way. And you don't necessarily have to go with, say, something big all on your own. So if you are really interested in land banking, then you could go on your own, or you could go into fractional investment platforms who do all this research, find the right properties, and then you could invest in that.
Right. Okay. So some sort of syndicated opportunity in essence.
Yeah. So fractional investment platforms, the way I like to explain it, it's like crowdfunding for property. So there's companies out there that go and do the research, find the deals, put the deals together, and then put them out there and say, who wants to be a part of it? Who wants to, crowdfund this deal? And then people go in, buy little pieces of it or maybe large chunks of it, and then be a part of that.
Okay, cool. And I guess coming back to that concept of the portfolio, Sally, is, there'll be people listening to this podcast who are really early in their career, people mid-career, obviously later stages of their career. And there'll be some people at points in their career where they're thinking, my needs are going to evolve and change over time. So I've got this portfolio that I might have set up at the beginning, and obviously a portfolio needs to be managed. What are the elements of managing a portfolio? How do I analyze that risk? How do I know that this portfolio needs to be balanced or rebalanced in a way that's going to meet where I am now, and knowing that as I'm getting older, perhaps my risk profile is going to change, all those sorts of things. How do we manage the portfolio?
So I suppose what you really need to do, and where most people get distracted, is keeping that end goal in mind. So you will find that some people go, I go do a renovation, and then they go, I want to go do this, and someone else to talk about that, so I'm going to go over here and do this. But if you keep your end goal in mind and keep working toward that, then that will help sort of build your portfolio to make sure you're all heading in the one direction. Now, in terms of managing it, you've got two options, and it depends on how much time you've got. Obviously, anything that we do these days, we can pay people to help us out. Or it's also about building the team like we talked about before. So for all my rentals, I've got a variety of property managers that take care of them, in which case I don't need to do a lot. I've built relationships with these people. They understand how I like to communicate, what bits of information I want to know. So they go and take care of the properties and just report back to me, hey, this is broken. Do you want to fix this? Yep, go for it. And they go and organise it. So I don't have to go fix toilets in the middle of the night or anything like that everyone says they don't want to do. So it's about having that team around you that will take care of the different portions for you, which is similar to what you get in a dental practice. You've got your team there, your receptionist, your accountant, everyone there that helps you to achieve your goal. Property is the same kind of thing. You need to build your team.
And what I'm hearing you say then is treat it as a business, not as a hobby. Just treat it seriously, resource it, make sure you're doing the things that you would do in your practice. Build that team, build that network, get the advice that you need. Pay for good advice, just like you'd pay for good team members in other parts of the world and in parts of your business. Do the same. So it sounds like a very, very similar concept. I wanted to ask you something we haven't touched on is commercial property.
Yes.
How do you see that fitting into the mix here?
Commercial property and retail property can actually be really good for cash flow. So we didn't cover that before, but it's certainly good there because the rents are generally, as you guys know, because you're generally renting properties for your businesses done on the square meters. So if you want cash flow, then it is a good form of that. It doesn't grow in capital growth as much because generally the prices of commercial and retail properties are based on the rent that's coming in. Now, the challenge with commercial and retail property more recently is there's been a divergence from, the main street where all the shops are, that you could go to those previously. Now they're going into big shopping centres. So there are still some good opportunities out there if you sort of keep an eye out, get into the right spot. But as we know, going through the pandemic that we have, lots of shops are becoming empty. So there's pros and cons for it because you do have the risk of the economy. But as you know, as business owners, when you rent out a commercial property, you're renting for 3, 6, 9, 12 years. So you can have that steady income with a longer term.
Yeah, and it's interesting. Yeah, one of the things that I find with commercial property as well is, obviously, if the lease is right, you can push the outgoings to the tenant. Hopefully, if you've got a new building, the outgoings are less anyway. But I guess the thing around that is the security of the tenant's, business is going to be key there. And one of the things with the pandemic, there's lots of people working from home now. I wonder whether people are going to go back to the offices or whether there's going to be a glut of office space around that. So do you have any, I know that we're speculating a little bit here, but do you have any thoughts around that?
It's interesting watching some of the big companies, especially some of the big IT companies like Google and so forth. They're all sort of predicting that the whole sort of work dynamic is going to change, that if you don't have to be at a location, then you don't have to be. And we're expecting to see more people working from home, which can certainly help out the residential market because then people are going to want potentially nicer homes, bigger homes with more rooms because they don't want to have their work on their kitchen table.
Yep.
But then commercially, that can affect those properties because some of those big companies that would have had a huge office space to cater for all of these people and all the desks won't need as big an area. And it's hard to predict. So definitely over the next few years, it's not going to go back, everyone working in the office relatively quickly. But it's hard to predict sort of 5-10 years time to sort of see when we come out of this, what is going to be the sort of work that people can get done. Are they going to be as efficient working from home compared to the office? So will people start bringing people into the office to try and help that efficiency?
Yeah, I think it's going to be an interesting situation. I wonder whether we're going to have a hybrid style, whether, we're all in the office before and everyone's then been all at home during the pandemic, whether we're going to have a couple of days in the office, a couple of days at home or whatever. But I wonder whether things like co-working spaces, they're already popular, but I wonder whether they're going to become more popular, rooms by the month, no locked in leases, all that sort of stuff. So I'm interested to see what's going to happen there.
Yeah, it's going to be fascinating. And obviously, if you go into a commercial or retail where people have to be there, like a dentist practice, because you don't want the clients coming to your house.
No, thanks. No.
Then those properties are still going to be in demand. But maybe it might change in style a little bit more. If more retail properties are available, they might move to a different place that has, say, more parking or is cheaper because there's less competition.
Okay, I think that's going to be interesting. And one of the things that, I guess if you're looking at selecting commercial properties, you're going to want to look at the strength of the tenant, their financial position. You want to look at the lease and the quality of the lease. You're going to want to look at the infrastructure that tenant has had to sink into the premise, because they don't want to get up and move after they've spent all that money, and locational goodwill as well, which means we as dentists make really good tenants. So maybe buy some tenancies with dentists. And I don't know. That's not, just to be clear, ladies and gents, that does not constitute financial advice. So, Sally, I guess one of the things I wanted to ask you is, what do you think the mistakes are that people make when they're going about their wealth building? Where do people come unstuck? Where do they go wrong? Is it mainly they keep deviating from the plan, or where do people come unstuck?
The biggest one where I see where people come unstuck is they follow what they see on TV or what their friends are doing rather than what's going to be best for them. So as we've seen on the TV, every year the block happens. Sometimes the contestants walk away with $100,000, $200,000. And if you watch around, everyone starts renovating all of a sudden. There's all these houses go for sale, trying to get renovated, and then they just sit there for ages. Yeah. It's not quite as easy as what they make it on TV, although some parts on TV don't look that good. Yeah. But I think people sort of see the dollars and think, it can't be that hard, I'll go and do it. But as we talked about earlier, we're all different. So what works for one person may not work for another. If you don't have the time to be there painting and you want to be there till 1:00 in the morning painting the walls, then maybe that's not the best one for you. And for me, I found renovation wasn't right for me. My brain tells my hands what to do, but my hands don't want to cooperate.
Yeah, I'm the same as you. I'm okay on dental hand pieces and drills, but otherwise, no way. But for some people, that's their thing, and great, good for them. But no, not my cup of tea either. So I'm looking at your website, mindsetmoneybox.com, and there is, a plethora of resources there. And I know you've got a course there. Could you just walk us through what that course is? Because I know there'll be people listening to this that want to go and do that free course there and find out a bit more about what you do. Can you just walk us through what the course does, what the outcome is if someone goes through that course?
Yeah, so I want to help people not make the mistakes that I made and really connect with the right property strategy for them. So in the course, we start looking at different property strategies and start explaining what the strategy is and the mindset that is suited to it. So does it build capital growth or cash flow? What are the requirements for it? And help you connect to that strategy, or really see that maybe that's not the right strategy for you, with the outcome of trying to connect people to the right strategy for them.
Great. And once they've found out the right strategy for them, what happens after that? So
if it aligns to the strategy that I use, which is build to rent, we do have more resources there to help people work through that strategy, all the bits and pieces they need to do, work out their big level plan, help them understand the building process, help them find the land, the builder, the agent to help them rent. So there's those tools there available to help them out as well.
Great. Okay. So ladies and gents, if you're interested in finding out about how property might be able to help you build your wealth, and specifically what type of strategy is going to suit your stage of life, your personality, your risk profile, all those other sorts of things, the course that Sally's got on the website is going to give you some clues about yourself. So, above all else, know yourself, right? Because I've made lots of mistakes over the years of, not just in business, but in investing as well. Thankfully, nothing too fatal. But again, some missed opportunities, some wasted time, a bit of lost money here and there. And hopefully you can avoid that as well. So if you want to head across to mindsetmoneybox.com, that course is there. You can take it and, get to know yourself in that investment frame of mind. So Sally, you've been really generous with your time today and sharing your knowledge, sharing your insights. If there was one or two tips that you think people should know that aren't so common, and if we were to put it on a billboard and had the gospel according to Sally Roche, what would be the gospel according to Sally Roche?
I think number one, understand who you are and your wealth mindset. But two, know you can change it as well.
Yeah.
So if something's not suiting you right now and you know it's holding you back from hitting your goals, you can change that.
Fantastic.
And it's actually an amazing feeling when you do go and change it.
All right. Well, Sally, once again, you have been incredibly generous with your time today. I'm tremendously grateful to you for hanging out with us and sharing your insights and your wisdom. And ladies and gents, that website again is mindsetmoneybox.com. Go across, check it out, do the course, have a look at the other articles and bits and pieces there. And I know that you'll get some really good insights from that. So Sally, thanks so much again.
Thank you, Jessie, for having me. It's been great talking.
Cheers.
Thank you for listening to the Savvy Dentist podcast with Dr. Jessie Green. For more free tools and resources, join the free Facebook group. Visit drjessiegreen.com/Facebook. And for more episodes, visit drjessiegreen.com/savvydentist.